Here's the daily trend line. Here's the same trend line. Here's the short-term trend line. Here's the same short-term trend line. Here's the access point. Here's the same access point. And once you had your break through the short-term trend line, your directional bias is confirmed as long, and you would go to the lower time frames and start looking for long entries through breakouts and momentum plays. Now, as a reminder, the most important part is that this all occurred after reaching and reacting to an area of high confluence, as you needed all those different schools of traders to enter the market in order to create upwards momentum. And what you were doing is riding the momentum for your trade. So now that you understand trend trading with the 50 EMA, let's move on to reversal trading. And before we continue, if you're enjoying us releasing new videos more often, make sure to hit the thumbs up button and to comment below right now with your questions and thoughts, as this lets us know you want more videos. So here on the daily time frame, you first had your trend line drawn right here. You had your clear moving uptrend through higher highs and higher lows, before you had your trend line break and a break through the 50 EMA, which was your first signal of a possible trend change. Price then made a lower low, which was another signal of a trend change. Next, here was your key resistance level that acted as both support and resistance in the past. This here was then your access point, where key resistance and the 50 EMA both lined up. Now, as price came up to this access point, you had a picture-perfect, very long wick candle that reacted to both the key resistance level and the 50 EMA. But again, a reaction does not equal a trade short. So what we do is we put a tight trend line in and go down to the 4-hour time frame. So let's put the daily and 4-hour time frames side by side. So here on the left is your daily time frame, and here on the right is your 4-hour time frame. Here is the resistance level on the daily time frame, and here is the same resistance level on the 4-hour time frame. Here's the daily long-term trend line. Here's the same long-term trend line. Here's the daily short-term trend line. Here's the same short-term trend line. And here's your access point. Here's the same access point. Now, once you had your break of the short-term trend line, this shows that the pullback is over, and once price made the lower low, you can start looking for short entries and start taking breakout or momentum entries through the lower time frames, as your directional bias is confirmed. Again, the most important part was the big picture trend change through the break of the trend line combined with the pullback reaction to an area of high confluence. So, moving on. Now, in this example, we're going to take this up a notch and use the 50 EMA through the intraday timeframes for a more aggressive early entry. So, here in the daily time frame, you had your clear moving downtrend as price was making lower highs and lower lows. You then would have had your long-term trend line drawn in like this. Price then broke the trend line with a candle close outside of the trend line, which is the first signal of a trend change and giving you a short-term bullish bias. Now, your traditional entry using the previous strategy we showed you would look like this. You would draw your key support level here because of these 3 points and wait for a pullback and rejection of this support level. You would then put the short-term trend line above, and once you had your breakout, you would look for possible long entries, and that would be perfectly fine. Now, here's where we take it up a notch. Our entry into this trade came right at this break here, but exclusively through the 4-hour time frame. So let's put the 2 time frames side by side. Here on the left is your daily time frame, and here on the right is your 4-hour time frame. Here's the daily long-term trend line. Here's the same long-term trend line. This area here, where the breakout candle occurred, is the same area here on the 4-hour time frame. But as you can see, there's a lot more detail that we can see on this time frame. So let's go through step by step what went through our mind. 1. On the daily time frame, we noticed that price broke through the long-term trend line and had a candle close outside of the long-term trend line to give us our short-term bullish directional bias. 2. This here is already a current moving uptrend, as price is making higher highs and higher lows, and we want to be trading with the uptrend momentum. 3. Here was your intraday support level, as you had multiple reactions right here, so you had it drawn in. 4. Here was your trend line because of these 2 points here, and you had it drawn stretched out further. 5. And the most important part, you had your access point here, an area of high confluence, because the support level and the trend line and the 50 EMA and the backside of the long-term trend line all intersect perfectly. Now, as price approached this access point, we were looking for price action, which we got through these two great candlestick formations where the wicks were sticking out, showing that price is indeed reacting to everything at this area of high confluence and all its traits. You then put your very short-term trend line on top of the short-term pullback, and once price broke out, you go to the lower time frames and start looking for breakout or momentum entries long, as your directional bias is now confirmed. Remember that the most important part of this quick intraday entry was because of the long-term trendline break on the daily with a candle close outside, and then confirmed through the intraday price action entry. Again, these concepts will continue to get deeper and deeper as we build on all past videos, so make sure you are all caught up. Now, if you want to learn more about our exact intraday entry strategies, head on over to our website at wisetrade.com. So if you are enjoying this new format of more frequent video releases, make sure to hit the thumbs up button and comment below right now and let us know your thoughts and questions, as we love hearing from you all. And it lets us know that you want more videos more often. So thanks for watching, and I'll see you in the next episode.